biggest question I had that started me on the path of entrepreneurship was where to put the extra money I'd saved to get a high return and grow my retirement fund. Have you ever asked yourself this too? At first, I started to look at stocks because it seems like the easiest way to make quick money, especially if you're not starting out with a lot of money. But I also knew so many people who dabbled in stocks with their savings only to be disappointed when they found out that their best year got them only 8% and frustrated when they lost half their value in a bad stock pick. But as I began to do more research, real estate really began to look more appealing for four main reasons. Reason number one, little to none of your own money required to put down, but you still get to reap the rewards of large profit amounts because houses are the biggest purchases most people make in their life. Have you ever seen signs for people who buy cars for cash? They are essentially trying to buy a cheap, distressed car for $3,000, fix it up by doing $1,000 in repairs, and sell it a couple months later for $5,000 or $6,000, leaving them with $1,500 after fees and taxes. That sounds okay and attainable, right? But that person most likely spent months and months learning that trade in order to do it risk-free. In the same way, when I started, I spent months and months learning the real estate trade and learned how to do the exact same thing, except I buy a distressed house for $100,000, doing $30,000 in repairs, and selling for $180,000, leaving me with $20,000 in profit after fees and taxes. Which sounds better? What if I told you there's a way to do that with less risk than most people think? Now most people are saying, wait, stop! Don't be ridiculous. I don't have $130,000 to spend on a house, even if it is a really good deal. But here's the secret I learned. There are a lot of rich people who know their money can make them higher returns in real estate than in stocks. But these people are looking for people like you that have the time and are motivated to borrow their money, buy a house, and make a large profit that you can both share. Reason number two. Real estate offers higher safe returns than any other investment vehicle. You might have heard stories of friends that day trade stocks that make crazy returns in minutes or hours. What they don't tell you is that they lost the same amount 9 times in a row the week before. This bias you have for stocks is similar to how you never see lottery losers on the news, so you think that winning is actually a higher possibility. For the most part, average people not on Wall Street, don't make a killing in stocks. You can make 4, 5, 6% in stocks safely, but the average person does not make that killing in stocks. If you've ever seen The Wolf of Wall Street, you'll know that some of the people that make the real money in stocks are the ones that are selling you the stocks and making commission. They're making their money off you and not the stocks. If you want to be safe with stocks, you'll most likely only make 6 to 8% on average. So if you have $100,000, you're only making $6,000 to $8,000 in your pocket every year. Now let's look at real estate compared to that. In real estate, it's very easy to find a rental property that will return you 12% on your investment. So if you buy a $100,000 house, you will be getting $12,000 in your pocket every year. And if you use money from the bank for a majority, this is called leveraging, and use your own for a small percentage, you can very easily turn that 12% into a 20% return on investment. Don't worry, this isn't actually as intimidating as it sounds. Just letting you know that there are a lot bigger opportunities in real estate. As a 21-year-old about to be fresh out of college, I wanted something that could slowly liberate me from needing a 9-to-5 day job. Now, whether you're 21 or you're 40 and you're already in that 9-to-5 day job, this video is for you. I wanted something active to do every day, and day trading could be that, but the risk to return ratio just wasn't enough to let me quit my job. Real estate offered an asset I could literally control everything about, which leads me to point number 3. Real estate is a physical asset that you get to control and make more profitable by changing the expenses and raising rent. For example, as a shareholder of Coca-Cola, you have no control over whether the company grows or suddenly tanks. While Coca-Cola is stable, there's also no way to control it to make it grow faster and give you more money. I wanted to be in control of my money and be able to grow it and sustain it to get as much money back as possible. With a rental property, you get to control everything about it. For example, cutting down expenses, raising rents, and finding better tenants. And lastly, point number 4, I wanted something that would be able to survive economic downturns. Okay, I'm going to give you 2 scenarios. Which one sounds better to you? Your entire life savings is in mutual funds, stocks, and bonds. This has grown at an average of 8% for the last 30 years, and the year before you plan on retiring, the market crashes. Your retirement savings is now half of what it used to be. You had $1 million in your retirement funds, now you have $500,000. That $1 million was supposed to last you for 40 years. now you have to make $500,000 last for you. So now you have to keep working for another 10 years while the market recovers, or just decide to live on half of what you had planned. Scenario number 2. Your retirement is based on 10 paid-off rental properties that bring you $10,000 a month passive income. A year before your retirement, the market crashes and you lose half of the value of your homes. Guess what? You still make $10,000 a month, if not more. When the market crashes, people don't want to buy as many houses, so rent prices will rise. Sure, you just lost a lot of the value of your homes, but you didn't base your retirement on the value of your homes. You based it on what was your monthly income. So you still get to retire this year. The market will recover in a few years, and you can sell your houses later if you really want to cash out. But for most people, they'll probably keep those 10 houses and make $120,000 a year for the rest of their life. Now, I'm going to be honest with you, there might be a few drawbacks for real estate. Real estate will require slightly more time up front to do research and pick the right team and the right houses. You can go buy shares of Coca-Cola in the next 10 minutes, but it will take a little longer to buy your first house. But if you listen to an audiobook for 10 minutes a day on the drive to work, or just read for 10 minutes a day before you went to sleep, I guarantee you will have enough information in 1 month to buy your first house with the assistance of a good realtor, a good contractor, and a good property manager. And by the way, any good book that you read should teach you how to find these people and vet them. Now, buying that stock in 10 minutes doesn't necessarily mean you've made a safe decision or any money. So to do stocks the right way, I would argue that you also need a lot of upfront research time before you buy. And dollar for dollar, I strongly believe real estate has safer and higher returns. Hey, thanks for watching. The reason I created this channel was to start changing the conversation on how to build wealth. And I legitimately want other people to have the success that I've had in real estate. So definitely comment below if you'd like me to put out another video on how to find investors to put up 100% of your purchase price, or which books you should start reading right away. Thanks.